Folks, we are live. Welcome to Sunday Night Futures Live. Sorry I'm a little bit late. This is the first full week of Sober October. No alcohol. Supposed to be no carbs, but I did cheat last night. Party. But no alcohol and a little bit of sugar last night. Got to say that. But very light. Very light. Few more weeks to go. All right. So let's kick things off first with the opening futures action. Then we'll segue over and into, hey, Abel, I hope you had a good weekend. Thanks for all you do for us retail investors. You betcha. My pleasure, Abel. Thank you. What we're going to talk about tonight are obviously the opening futures action. We're going to talk about economic data that came out last week, coming out this week, as well as some headlines that we need to keep an eye on. And we're going to talk about the valuation of the market. Then we're going to segue over and into our members stock chart request, which is where I review the symbols that members submit for me to review. We'll take some super chats, and if we have time left, we'll take some symbols from the audience. We're going to be going over mRNA, PLTR, Microsoft, and wheat, WEAT. That is the not leveraged ETF. It is the ETF putting you long of, actually ETN putting you long of wheat. So let's kick things off first with equities. Last week was a rough week, particularly on Friday. We saw a lot of selling into the close, and it was institutional distribution, and we haven't seen that in a while. So while this evening we are moving up higher a bit, we're up just fractionally. And keep in mind, as we proceed into the new trading day, we left the day on Friday leaning down into the third standard deviation Bollinger Band on a 4-hour time frame with RSI, which was at, let's call it 28. So, quote unquote, oversold, ripe for a bounce. So this price action right here, right now, no great shock. The question is, if they rally the markets tomorrow morning, as they did, I believe it was on Thursday, definitely on Friday, do they fade them again? Right? You don't want to see bright green futures and then all of a sudden the market opens up and all of a sudden it reverses. That is bad stuff. That, to guys like me, that's blood in the water, because we know what's happening. They're pumping the market, and then the whales are moving in, and they're selling strength. They're distributing their shares. So if they don't want to be long, you don't want to be long. The problem is that a lot of people right here, right now, are in denial that this market will never, ever drop. And there are a lot of retail investors out there right here, right now, that weren't even trading before the markets were majorly manipulated. They got their stimmy checks. They're trading weekly SPY options, and they're going to get blown up. It's only a matter of time. It's going to happen. May not be tomorrow, may not be this year. It's going to happen. Eventually, we're going to get a correction. And you're seeing signs of one right now. So what I want to do here is create an alert. All I really care about before I take action on anything is, do we put in a new weekly low? We got to check that box before we change our strategy at all. Because that would mark a new continuation breakdown. Let's drill down for a moment. Let's take a look at a 5-minute chart. Are we holding gains? All right, we don't want to stare at this too long. It's only a 5-minute chart, light volume. Let's take a look at the Russell 2000. We continue to carry a short position. That worked for us well, particularly on Friday, because on Friday we broke a support level, and we close there. They're trying to rally it back at current. Maybe they'll rally it, maybe they won't. Maybe they'll fade. And this is my prep for the coming trading week. You know that if we begin to break down on the indexes, that right now, anyway, you don't want to go buying the dip. We're not at great support levels at current. William, hey Bob, Jets fan? Yeah, I guess. Not, you know what? Not really. All right, so here's the story. I'm neither a Jets fan or a Giants fan. Why? They're not New York teams. I know New York Giants. They're not New York Giants. They play over New Jersey. So, I hate to say I'm a Bills fan. I'm really not, but it's the only New York team that we have. So, I'm not going to make many fans here that are from New York right now. Believe me, I know it. But that's my position. I'm sticking to it. I feel like they abandoned me as a child. So I remember when both played here. I loved it. Loved them both. And I was probably more of a Jets fan than anything else. Then I became a Giants fan when they were winning. And then I got turned off. Can you take a look at BA? If we have time, absolutely, William. No doubt. Falcon. Hey, Bob, continued construction problems. 50% of all appliances are unavailable until March. Wow. Should we invest in Goddecker? GOD? If we have time, we'll take a look at that Falcon. GOED is a symbol? Okay, William, you agree. Okay. Yeah, it's more of my ties to football, more emotional than anything else. It's all about my abandonment issues. IWM, new weekly lower lows. I did it again. I always do that. I didn't do at or below. All right, here we go. At or below. There you go, Bob. Good boy. All right. Where's the NASDAQ? NASDAQ up fractionally. Opened up higher, faded. All right, so the jury is really out here. Okay. All right, so those alerts are set. You know, we have options positions on. We have a strangle on the TQQQ is set to expire on September the 24th. Right now, our call side of that strangle is being tested. It has been being tested, but it came in quite a bit. I'd like to see it drop down to within our profit zone. Right now, if it expired where it is right now, we'd be profitable on it. So I would like to see a lower low on the week. If we see big breaks on the week on rising volume, we're probably going to look to add to shorts. And keep in mind, folks, one thing, before I forget, I didn't plan on speaking about it, but it's worth noting. The debt ceiling. Watch the debt ceiling. That debate is going to start to heat up, very tight vote in the Senate. And Janet Yellen sent a concerning letter over to Nancy Pelosi about the debt ceiling and her concern that it wouldn't get raised. If it doesn't get raised, you're talking nuclear Armageddon about our debt ceiling. We default. We default on our debt. So Keep an eye on that. And the only reason why I would bring this up, normally I'd say, don't worry about it. The only reason why I bring it up is because of this Afghanistan thing. And to me, it seems like a self-imposed debacle. And a lot of things that we're doing right now seem self-imposed. And trust me, nothing could be worse than the United States defaulting on its debt. Nothing. Our lifestyles would change like that overnight. You would see yields rip. What else we got? Let's go to the dollar. The dollar had a good day on Friday. After hours, it continued up higher. No new session high. I know this is showing up at current, but that reflects the after hours price action on Friday. But so no new weekly higher high yet, despite the fact that it shows as being higher. All right, let's check out precious metals. Why not? Gold down on the session. No new weekly lows. Yeah, William, thank you. Smash that like button, please. Thank you very much. OG1 Kenobi. How you doing, pal? Where's the SPXS? That's a short ETF of the S&P 500, right? We'll take a look at it if we have time. Our train. Hey, Bob, what about AZO? If we have time, our train, I'll go over it. I have a bunch of member charts requests to go through, and then I need to go to Super Chats. Let's go to silver. Silver opened down, but off the lows now. Nice price action here. I'm not quite sure why it's showing as down. Maybe it's reflecting the after hours price action on Friday. That's probably what it is. But we are seeing a nice move up higher here on silver at the open of the week. Copper. Copper looking good. Very good. Natural gas. Pulling back here. This thing has been in fuego. Pulling back down just shy of 3/4 of a percentage point. Holding the rising 20-period moving average. So we did break one support level. Now moving forward, this this line in green here is going to act as resistance. So before I would add here or open a position, I'd want to see a pullback to this lower band of support. And I would be trading Boyle. That's the leveraged ETF putting you long of natural gas. What else do we have? Why am I missing some? Here we go. Cattle, protein, up on the session. Looks like commodities are okay. Not great, but okay. I want to check out the euro. Euro is off the session highs. Yen. And the reason why this is so important, we have very big commodities trade on. It's our inflation portfolio. And when the dollar rallies, it adversely impacts that portfolio as it did on Friday. What we're looking for is a break in the U.S. dollar. The U.S. dollar, while it did rally last week, it failed to recapture critical resistance. VIX. What a day for the VIX on Friday. What a week. So the week before last, we broke out on the VIX. We got a follow-through rally last week. At current, we're down. Gasoline is up. 10-year Treasury bond is flat. So yields aren't doing much right now. Let's just check back in quickly with gold. Not much happening there. All right, let's take a look at some charts. Actually, let's go do the economic data first. All right, so last week we had initial jobless claims, which pulled in. That's great. And we had Kaplan. Did anybody see Kaplan come out with his portfolio of holdings? He did really, really well. He did really, really well. Holding all the expected names, Amazon, Google, Netflix, Facebook, did very, very well. So on Friday, we had the producer price index, which came out hotter than expected. And that's one of the reasons why you saw yields rise, the dollar rise. But it did roll in less than the prior month, which is good to see. Now, this week, what we're going to get on Tuesday is the consumer price index. And we're going to see whether or not the producers are able to pass along their rising costs to the consumer. At some point in time, they're going to have to. They're going to have to realize that inflation is not transitory. That what the Federal Reserve has been saying, and the reason why they haven't been raising rates or prices as much as they would have normally, is that the Federal Reserve has said it's not going to last for very long. Transitory is a relative term. What do you mean by transitory? Is that a year? Is it 6 months? Is it 2 years, 10 years? What does it mean? So, yeah, I guess everything is transitory. Our lives are transitory. They're not permanent. So you don't know how long your life is going to be. So watch this number. Very, very important. We're going to have the Empire State Manufacturing Index come out on Wednesday. Industrial production, very important. Retail sales on Thursday. And, of course, initial jobless claims. Not a hot week for economic data, but all eyes are going to be on the CPI. Now, I've been reluctant to talk about the cerveza sickness, and I watched a video today. I'm going to share this with you folks. I would suggest that everybody watch this video, this interview with General Flynn. That's in the box. And, he's of the opinion, and I expressed this on Thursday evening when the president came out and he issued mandates, very unconstitutional mandates, dictating what you're going to do. And if he gets away with it, it's just going to be more dictates. It's just going to be ongoing. It's never going to end. So beware of that. Watch that video. And he's of the opinion that the reason why we're going through all these mandates, why we're going through Afghanistan, is all has to do with the 2020 election and what's going on in Arizona, Pennsylvania, I think Wisconsin, and Georgia. So the swamp, we'll call it the swamp, had expected that the chatter about the elections of 2020 would die down. People would accept the results of the election by March of 2020. March of 2020. No, March of 2021. Duh. And they didn't. It hasn't died down. It's only gotten hotter. So that's why you keep seeing all of these new false flag events. You decide for yourself. I'm not going to draw a decision. I'm not going to say it's the big lie. I don't know. I want to see facts thrown in front of us. We don't have any yet. So take a look at that. But the thing that keeps reinforcing what General Flynn has to say is that every day it seems as though the regime continues to squeeze harder and harder and harder to change the narrative, to control the narrative. On Thursday, to get talk off of Afghanistan, we came out with the mandates. And he even said it during his speech that next month we're coming out with even more. Fast forward to today, here's your Surgeon General out there. He lacks specifics, but pretty much guaranteed we are not done yet. Now, I think that if in fact you believe that there was shenanigans in the 2020 election, that it all has to do with mail-in balloting. And if they try to lock us down and get mail-in balloting yet again, we're done. We're done as a republic. So keep an eye on what keeps coming out. Anything that keeps you in your home and afraid out of Washington, D.C., be very, very concerned. Be very, very concerned. And it's going to impact the market. They lock down this country again. So everything I have to say goes back to the markets ultimately. If they lock this country down again, what's going to do well? Amazon, Peloton, anything, Zoom, any of the stay-at-home stocks, they're going to do great. They love staying at home. They love lockdowns. All right? We don't want lockdowns. So small business will catch it on the chin yet again, which is why we're still short of the small caps. So keep an eye on that. Ballot harvesting as well. Yes, major thing. I'm in AZ. OG1 Kenobi's in Arizona. The forensic audit final results will release next week. I hear that I was listening to Steve Bannon, that there's going to be a lot that comes out and it's not good. So if you see perp walks out of Arizona, man, it's going to force a lot of states, even the blue states, to have to take a look at their elections to see whether or not there's been any shenanigans. Maybe they're not supposed to be blue. So very interesting stuff. Buckle up. It's going to be very, very interesting. Larry, question for you. If the market contracts 10 to 15% in the next few weeks, what sectors will bounce back the quickest? It depends upon the reason why you get a bounce back and the reason why you get a rally off the lows. If it's a Federal Reserve bailout of the markets, then you're probably going to see your typical names do well, your technology names, because they're driving down yields. If the market is self-correcting and it's allowed to correct and yields rise, and whatever concern the market had about the market correction evade on their own, they diminish on their own, and yields are allowed to glide higher by themselves, and we get some halfway decent economic data, banks, transport, all the cyclical names, anything that would do well in a rising interest rate environment when you got good economic growth should bounce back, and that might put a little bit of pressure on your technology names. So it all depends upon the whys behind why are we finding a floor? Why are we bouncing back? So watch for that why, and if it's all you need to do is this. Watch the 10-year yield. If the 10-year yield is dropping, look at tech. If the 10-year yield is rallying on good economic data, look at your cyclical names. If yields and the dollar drop at the same time, look at gold, the miners, silver, all your commodity complex. That's where you want to be. But bonds have to drop yields have to drop, and the dollar has to drop pretty much at the same time. Yeah, Gateway Pundit is pretty good. The Gateway Pundit is pretty good. I don't even think that's a U.S. Publication. I could be wrong on that, but I don't. I think it may be British. All right, let's talk about valuations. No change from last week. Despite the fact that the market was down last week, we remain at a 3.1 standard deviation elevation beyond historical trend. Bananas. Crazy, crazy how far we're extended. Hold on one sec. Let's tweet this out. Let's tweet it out. Okay. So, Buffett indicator, no change from last week, despite the fact that we pulled in a little bit, and we are moving up, possibly higher this coming week. I worry about that. Here's the composite market value from 1950. Look at this. Look at this. It's so crazy. It's so crazy. We live in crazy times. The Schiller PE ratio, I don't believe there's a change from last week. I think this is pretty much unch from last week. 38.51, the second highest since the dot-com crisis. Folks, we're going to move on now. And what we're going to do is first, I'm going to ask you with all personal gratitude, please smash that like button. Tell a friend, share, subscribe, and we're going to talk about our friends and sponsors. Before we go into members stock chart requests, we're going to talk about our friends and sponsors over at TrendSpider. Folks, you need to be able nowadays to automate your grunt work, especially if you're day trading. You need to be able to fight against the algorithms. So you need automated technical analysis. TrendSpider's for you. Speed up your technical analysis while at the same time improving your accuracy. For those out there that are experienced like me, we always need to continue to hone our skills. I always test and retest my skills, and there are times where the algorithm picks up something that I never even thought to pick up on. So it teaches me something new most of the times. And for the new people out there, draw your manual trend lines, then overlay the automated trend lines to check out how accurate you are. I still do it to this day. Reduce costly analytical mistakes by timing your trades with precision, by using their trade alerts and find winning chart setups with their scanners. Go over, use the link below, 30% discount code. Take a 7-day free trial offer or a demo tour. I give it away free. This is how much I believe in this. I incorporated it with my business. I give it away free to silver and gold level members. I give a 14-day free trial offer. Use the link below. Let's get to members chart requests. I sent out some tweets on these names earlier today. mRNA is the first one up. Why are we stuck here? Oh, I got to sign back in. Okay. Okay. mRNA. All right. So, last week on mRNA, we had a very, very, very nice rally, but we rallied up and into a bit of resistance, and that enabled us, this topping tail on top of this weekly candlestick enabled us to draw our trend line down and use this as a demarcation line of where the shares must rally and close above before we opened up a long trade. So I'm looking for a breakout and a close at above at or around 466 per share, thereabouts. Daily chart. Here's that resistance level. We have our alert set. Now, what if we pull back? Because we had a bearish day on Friday. What if we pull back? Where would we go looking to go buying these shares? This is too close. This marked resistance back here in August. I like down here. We'll keep some sensitivity on. Touch, bounce, and we're good to go. So our alerts are set. There's not enough data here to use seasonality. Yeah, there's not enough data. So I'm not going to spend time on that. Okay, moving on. PLTR. So PLTR is looking good here. We are putting in, or have put in, I should say, higher lows. Right, so there are a couple of steps to find a bottoming process. One, you got to stop going down, consolidate. Two, you got to rally. Three, you got to pull back. Four, you got to put in a higher low, ideally a higher low. Sometimes you get an undercut, double bottom, but ideally a higher low. Now, we rallied for the past several weeks, and the week of the 23rd of August, we broke out. Retest number one, last week, retest number two. So while, yes, last week was a down week, all down weeks are not made the same. When you are lower on the week and you retest the support and you bounce back, that's good stuff. So PLTR still looks very interesting to us as a long. We're forming a nice W formation. What do we need now? We need a breakout. And our pivot point is right here, 2750. No sensitivity. Down volume last week was very light. That's good stuff. Daily chart. You saw a bit of topping action on Friday. So what we may do here is begin to form a trading range from which to break out of. Now, if we pull back to support here, let's tighten this up a little bit. I would entertain a long. Depending upon market conditions. That's PLTR. I don't know how much seasonality is here. I wouldn't assume much. No. So we're going to ignore seasonality. Moving on. Microsoft. Microsoft was a bit of a train wreck last week, with a bearish key reversal. Remember that Microsoft is the #1 largest component of the trip Qs. Number 2 is Apple. They got a bad decision against them in court, and those shares took a hit last week. So the Qs are under pressure and will probably come under a bit more pressure. Watch for support at 290.70. That's a monthly chart, weekly chart. Here's your breakdown. We had a rising wedge formation, ascending wedge formation, and we broke support the week of the 30th of August. Continuation breakdown last week. I think we could very well hit 290.70 this week. So Microsoft under a lot of pressure. Daily chart. 2 back-to-back bearish key reversal days. You may get some support at around 295. Maybe get support there, 295 the number. But Microsoft right now, I'm looking to open up a bear put spread, a debit spread. Here's the reason why. Quarterly chart, RSI 95.71. Yearly chart, RSI 95.58. Getting the picture? It's nuts. It's bananas. Monthly chart. Despite the pullback last week, we still have RSI 83.15. Tom Liu. Steven Van Metra is from other planet and talks a lot of nonsense. I don't know who that is. Oh, OG1 could. So Steven Van Metra has a new YouTube video saying gold miners are going to crash. I don't know. Here, I'll show you a chart of gold. And there's a tight correlation between gold and the miners. Where was it? Here. This is not it. I don't want to bore you. It just showed you where gold is historically, adjusted for inflation. God damn it. Here. Boom. Okay, so gold in real terms, adjusted for inflation, is pretty much unchanged from 1970 and from 2000. From both of those points, that's when gold went into a major bull market. So as long as gold holds support, I don't see a major crash in the gold mining stocks. What could change that is if we get a big spike higher in yields and the dollar continues up higher. Then it's possible. But honestly, they're so cheap and they're throwing up so much cash that you got to buy them. I wouldn't go buying any more right here, right now. But if they throw them even further on sale, I would. I would go buying more on a panic sell-off. And when you take a look at this chart here, here's gold monthly time frame, a massive cup, handle formation. When this gets going, breaking out above this upper band of resistance, we're probably going to take out all-time highs in the blink of an eye. It's going to take time, though. We have a lot of backing and filling here to do. Momentum is still not with gold, and the gold mining stocks are taking it on the chin. So could they pull back further? Yeah, they definitely could. I'm not going to say they can't. Will they crash? I don't know. Does he give a reason of why they're going to crash? Maybe he's right for all I know. Wheat. Excuse me, folks. Wheat. Okay. Texturium had a very, very good day on Friday. Maybe seeing you nuts. It was down. We'll come back to it. Weekly chart. So, yeah, a major move down last week. And what made it really bad is that we broke a very strong support level. Now, I'm not saying we're going to go straight back up this week, but what we did is we retested this breakout point, and it held, and we bounced off of it. So it's probably going to be a few more weeks of sideways consolidation. Ideally, we don't go down further, but more sideways consolidation, excuse me, and then we'll begin to pick up and rally further. Volume for the past several weeks has been very light. Daily chart. And here you have it, a spinning top formation right off of that weekly support level. I think we're going to begin to consolidate. The moving averages are not going in the right direction. They're declining, and they're going to take out, I think this is the 50-day, 50-day moving average. These are the 21-day. 21-day, rapidly declining. So the moving averages are not going in the right direction. I wouldn't be a buyer here. I don't see the risk-reward right now. How much time do we have? We have a few minutes to go back and take some chart requests. Will, BA. GOED for Falcon. Denny, hey, Denny. I just saw your hello. You're a Pittsburgh. I like the Pittsburgh Steelers. The best helmets ever. Pittsburgh Steelers. M. McNeil. What else do we have? AZO. UEC. Is that the new Sprott Fund? UEC? What else do we have? I think that's it, right? All right, let's do it. All right. Boeing. Boeing did not have a good week last week. Bad. So Boeing, it it broke down on a weekly time frame. Major breakdown on Boeing. I trade. That's what I go by, man. America's best teams, the Cowboys. You say the Cowboys have the best helmets. I like the Cowboys. I like the Cowgirls. They don't even talk about them anymore. Love the Cowgirls. All right. Hope my wife's not watching. Boeing broke support last week, and it looks as though we're coming down here to 203.48. I like 190 better. That's down here. But we'll set up an alert. I wouldn't buy it right now. And this just goes to show you. I want to know if it breaks through too. Because I like 190 better. It just goes to show you that despite the fact that yields rallied back last week, the industrials did not read it as economic expansion. Okay, just wrote myself a paragraph. We'll keep this active for a while. So Boeing weekly breakdown. I would avoid this stock. I mean, on a daily time frame, Christ, it's falling off our screen. We're going lower. So I would avoid this. And the market sent us signals here. 216, 217, resistance. Retest 1, 2, 3, 4, done. And it was telling same price action. Just avoid this right now. I would avoid it. Wait till it hits support. GOED. Not looking good. The monthly chart looks interesting. Godecker's the durable goods play. Interesting. Nice consolidation. Would love to know what happened here. Hammered. Weekly chart. Bearish key reversal week last week. We could retrace all the way back down here. What am I doing? That's good. What I also want to know is if we break out. No sensitivity. And we're good to go. So support is at around $3. Resistance at current is around $3.30. Daily chart. Godecker is a large appliance online outlet, big company. Thank you for that. Okay, cool. Daily chart. Rough day on Friday, man. You get a new move lower, day over day, week over week. I would avoid. Wait for the support level down here to get hit. I like the fact that the moving averages are rising, but don't be surprised. You're going to get a little bit more backing and filling here on Godecker. Longer term, looks promising. AZO. Could have sworn this thing was looking good a few weeks ago. Yeah. Wow. Oh, here's what happened. I just threw it up. Okay. Hold on. Watch. This is the automated trend lines. This is the value. We hit resistance, stalled out. Should have been booking profits up here. Now it's pulled back. We broke support. We broke weekly support. I would avoid this right now. Because what happens many times is that I talk about it more on a breakout. You want to get that pullback and a retest. The same holds true for a breakdown. You get a breakdown, you get a rally back and a retest or a retracement back up to resistance. And then many times what happens is that you simply break down. So I would watch this very carefully. If I were long, I'd probably be out right now. If it's a long-term investment, maybe you want to put on some insurance, but this is not looking good. It's a stock that has broken trend. It has broken support. We're retesting. This is a gift given back to. If you're long, you want to get out, get out. I don't like the setup here at all. Daily chart. Yeah. Here you go. Pulled back, hit support, rallied back, topping action, bearish reversal bars, no good. Granted, light volume. I think that the probability of us pulling back is pretty good. And the business should be doing well right now. I'm not exactly sure why this took it on the chin. Maybe it's an earnings report. Uranium Energy. You had a nice W formation here. Here was the pivot point. Great launching pad from which to break out of. The problem is this. I drew my own manual line, but I kind of cheated. Here. I'm going to remove my line. Here's the automated trend line. You have a lot of resistance above at $2.46 per share. I would not be a buyer right here, right now. I know it looks really, really great. I'd be a seller. I'd be looking to book profits on any strength up and into this resistance level. If it breaks out, wonderful. And it closes there, great. I'd buy then. Not right here, not right now. Now, where would we? On a pullback, where would we buy? Right at the lows of last week. And my son, I was talking about this with my son, the rally in uranium. Actually, he brought it up to me today. And he's like, if I never even thought about this. If uranium is rallying, shouldn't there be a bull market in lead? Because if you put uranium or radioactive material inside of lead, it generally contains it. Good thought. I never thought about it. So I don't think I've ever looked at a chart of lead, if there is a chart of lead. But something to think about. Things that make you go, out of the mouth of babes. All right, so anyway, we're looking for a retrace back down here. The lows of last week. Remember, though, it's a commodity. Right? It's not a stock. It doesn't have rising sequential earnings per share quarter over quarter. It's supply and demand. Once that demand is filled, so be careful on any pullback. You never know whether or not that's the top and it's all over and done with for the next 10 years. It's crazy. So just be careful. All right, what else do we have? WFC Wells Fargo, the world's worst bank. Ugh. Major break last week. I'm going to take the automated trend lines off. I had my alert set down here. I remember it fired off, but we broke it. No sense in getting involved. So let's get rid of this. I have another alert set down here. We'll keep that active, but I'm going to overlay the automated trend lines. And once we broke these two support levels, you had to get out. Daily chart. Now, the same argument I'll pose, or theory I'll pose, or observation I'll pose, as I did with Boeing. If yields are rising, why didn't the industrials do well? Isn't the economy growing? If yields are rising and the economy's growing and rising yields help the money center banks, why wouldn't the banks rally? What's wrong? There's something wrong out there. So the daily chart, honestly, there's something good here. But Friday's price action was very, very bearish with that bearish reversal bar. Now, on the good side of the argument is that we have a higher low. Being optimistic now. Here's your pivot point. 44, let's call it $45 a share. It's got to close above that mark. Maybe if it recaptures, where do we close? $45 a share, 44.75. I would nibble on it. But if yields continue higher and the banks continue lower, there's something very, very wrong with that. The banks should be doing very well with rising yields. And this is just not a Wells Fargo thing. I wouldn't choose Wells Fargo to buy. I'll just setting up the alert anyway, just to stay informed. That's it. Nothing else to do here, really. Citigroup. What a bloodbath. This is a monthly chart. I think what you're looking at here may be a bear flag setup. We break the support level, it's all over because we already have our macro double top. Weekly chart. Weekly support broken. Bearish key reversal bar. The one optimistic thing is that you didn't get rising down volume. But this daily chart is a basket case. Outside reversal bar. Rising volume. Let's check out seasonality. September is the second worst month of the year. Up only 48% of the times over the past 23 years. A lot of data there. What I like to do is check out two time frames. We'll go back 10 years. No change. At least for, actually it gets better. Over the past 10 years, it's better in September than the other chart. And the winter months are horrible for the banks. October's really, really good. So if you get a big sell-off into the back half of September, that may be your opportunity to take advantage of a seasonality run into October and November. Hey, Pat, how you doing, man? You down in Tennessee? Good for you. On the farm. Good man. You got a lot of energy, my friend. God bless you. You have your grandson with you? You got to invite me down there one time. All right. I think that is it. Pat, do you have anything? Let's bring up the futures, see how they've improved. Tell her I said hello, please. Hi, Amy. Thank you for the invite. Appreciate it. All right. So gold unchanged. Let's bring up the Russell. They've improved. We're up nearly a half percentage point. S&P 500 has improved, up over a quarter percentage point. Where are my NASDAQs? Here we go. NASDAQ up about a quarter percentage point. So, folks, the only thing I would encourage you to do is that they're probably going to paint the futures tape green tomorrow morning. Wait. Don't go chasing. Wait. Remember what they did on Friday. Go back and take a look at the price action. They faded it. Pat, Neo, let it settle out. Let's see where we close on Monday. I believe NEO is a Chinese stock. I'm going to say it. I would never buy a Chinese stock ever. Ever. I don't like it. Monthly chart, you know, the month is not over yet. Maybe it's going to rally back, but it faded. We're well off the highs. How did we do last week? A down week. My guess is that we get a continuation breakdown from this pattern. There's that support level. Bearish key reversal bar on Friday. The only good thing, light volume. I would avoid it. Pat, yes it is. I sold my portfolio profit to... You sold it to Artie? That's funny. K-Web. Hey, folks, while I'm doing this, if I could ask you to smash that like button, please, I'd appreciate it. Thank you very, very much. All right. All right, so not a bad rally over the past few weeks, but here's what I'm looking at. Whenever I see this, rarely with equities do you get a V-shaped recovery. On indexes, you'll get V-shaped recoveries. Not normally on individual stocks. It can happen. I'm not saying it can't happen. So what you want to see here is a pullback and a higher low and a W formation form. Here's your pivot point at 55.29. Where's support? It's probably going to be down here. At around 48.06 per share. I'm not setting up an alert because I'm not setting up alerts on Chinese stocks. I don't want to encourage anybody to buy these things. They're worse than penny stocks in my opinion. And the reason why, for those not familiar, the Chinese are clamping down. They're moving away from capitalism. and they're stealing investor money. If you buy a Chinese stock, your senior partner is the CCP, the Chinese Communist Party. Don't believe me? Look at Didi. How did this thing do? And I'll come back to K-Web in a moment. First rule of investing, try not to lose money. Look at this. We can just use a daily chart. It goes public. Let's use a weekly chart. It goes public here. China then comes out and says, nah, you can't grow anymore. Hammered. Bearish Q reversal bar last week. It's going lower. All right, K-Web. You're going to buy it. Wait for your pullback, probably down to $10 a share. Is that right? No. It looked like a 10 on my end. 48 bucks a share? I got something on my screen. Yeah, 48 bucks a share. I had something on my screen. Daily chart. Pat, be careful here, man. Be careful. Bearish Q reversal bar. You have the 50-period moving average, which is acting as a declining ceiling. This has got to flatten out. As long as this continues to decline, it's going to act as a ceiling. So be careful. Wait for your support level to get hit. 48 bucks a share. What else do we have? Baba? Oh, Pat, you're out? Good. Baba, another Chinese stock. A great company. A great company. I love Alibaba. I was using Alibaba years before they ever went public. But it's a broken stock. It's just broken. And the markets don't like indecision. Who's your partner here? The Chinese Communist Party. You got resistance above at 178 per share. You have support down here at around 160 per share. The only way I would play Baba is if we became, yet again, extremely oversold with RSI down below 20, off of support, and I would only use call options. And I would help finance that trade by selling a deep out of the money call option, and while using those premiums to help finance the purchase of the option. So that way, while I have a defined upside, I've also reduced my basis cost for the calls, and I know exactly how much I'm going to lose up front if my partners, my senior partners over at the CCP decide, you know what, we want you to change your business model and crush you. So that's the only way I would trade this. Touch, bounce. Let's see if we break through. Quite possible. We'll keep it active for 28 days. We're good to go. That's the monthly chart. Weekly chart. Not a good week. You got a lot of resistance up here at around 177 per share. Down week last week. We bounced off the lows of the week. Daily chart. This is a rising wedge formation, and it broke. It broke down here on the 9th, rallied back, just as I mentioned earlier, that while you get a breakdown, you'll get a retest of that breakdown point, and ultimately it resolves itself to the downside. So don't get lured back in. This is hopium. People that saw this down day and maybe a doji star formation aren't using trend lines. They don't realize what has happened here, and that is we've resumed a continuation breakdown. So they get hopium on a rally back up, They buy the shares. All of a sudden, they reverse and they get slammed. I would avoid the shares. With that, folks. Oh, yeah, puts. Good for you. Good for you. Nice man. All right, folks. Thanks for joining in. Smash that like button. Thanks for being here. Don't forget, 30% off a TrendSpider. I give it away free to our silver and gold level members. Jump over there now, and I'll see you on the back end. Be well. Have a profitable trading week. Take care.